Hey guys, what's going on? Welcome to a Q&A video. Now, if you follow my channel religiously and you've watched every video, then you might have seen that I was trying to reach 10,000 subscribers this year. And I was going to make videos about my analytics and how the channel was growing, but I don't think that really makes sense. You guys can see how many subscribers I've got on this channel. We're just over the 2,000 mark, and I'm gonna try and reach 10,000 subscribers by the end of the year. We may not get any more subscribers, or we might get close to our target, or we might get over our target, which would be amazing. But I thought that you guys subscribe to this channel because I talk about real estate. I also show you renovations when we had those on, and you're really interested in financial freedom, or personal finance at the end of the day. So instead of doing monthly or quarterly videos about my analytics, you can follow my subscriber account by actually subscribing to the channel. And I'm gonna do some Q&A videos every couple of months to answer your questions and to go through some questions I asked on the community tab on my channel as well. Before we get into all that, I'd just like to congratulate LJ Lancaster. She was one of the comments on that video, and I was giving away $18.86. So send me a message, LJ, either on Instagram or on Facebook, or leave a comment somewhere and get in touch with me, and I can PayPal you that money. So congratulations on that win. We'll give away $50 for this Q&A video. So if you want a sweet 50 bucks, then drop a comment down below, like this video, and subscribe to the channel. And let's jump into these Q&A questions. So I asked a couple of months ago, what do you think will have the best return on investment in 2022? 42% said cryptocurrency, 40% said property, 14% said shares, and 4% said cash. And that was based on 85 votes. Now, obviously, I'm very bullish on the property market, and the reason is you can leverage your cash. So you can have $100,000 and hold a $500,000 asset. So your cash on cash return is actually a lot higher than other investment assets, where you might have put $100,000 in crypto or $100,000 in shares. Now, I think it's pretty interesting that a lot of the YouTube community is focused on crypto. And I think the real reason that is because it is hard for millennials or, young up and comers. I feel like an old bogan. I feel like there's, the younger people, the younger generation is finding it difficult to look at property prices, especially in, Sydney and Melbourne as an example, and see how it might be feasible for them to get into their first home or to get into their first investment. So cryptocurrency winning out here doesn't surprise me given the YouTube community, but I definitely think there's potential gains in both. Just that crypto is a lot higher risk and a lot higher reward, and property has been a lot more of a steady asset, which has long-term growth potential and cash flow on the side as well. Question number 2, is now the right time to buy the dip in the stock market? 53% said yes, and 47% said no, the market will continue to fall. Now, I think that it might be a good time to buy into the stock market. It's had unprecedented growth over the last 18 months, but there has been a little bit of a pullback. But with what's going on, Australia's seen floods in recent times. We're seeing war in Ukraine as well. So the global economic market is becoming a little bit unstable at the moment around oil prices as well. So I'm looking at doing some videos about investing in ETFs. So that's why I was asking this question. So make sure you subscribe, and we'll have a video out soon about me investing in ETFs, what ETFs I was looking to invest in, where I'm putting my money, and why. So I will invest in the stock market at some point this year. So I will release a video on that soon. Now, this is probably going to be the header of this video. So will we see an interest rate rise in 2022? 65% said yes, 27% said not until 2023, and 8% said 2024 and beyond. So based on the communication from the big banks and the wording coming out from the Reserve Bank of Australia, it is looking pretty likely that there will be a rate rise late 2022 and potentially another rate rise early 2023. So I think interest rates will increase. Will there be a property price crash? I don't think so, especially not in the Brisbane market. I definitely still see opportunity. And I think it's about finding the right pocket and the right property, which has good growth potential both in the short and in the long term. Question number 4, where are you seeing the most inflation in prices? So the top 3 here were energy and fuel prices at 53%, food and beverage at 20%, and building supplies at 18%. The other options were cars and labor, so wage growth. So really people are seeing fuel prices go up, and I think that's in part to the war that's going on in Ukraine. And there's also been increases in those building supplies. So we're talking about food and beverage as well. So what is the cost of a cup of coffee these days? And what's the cost of a loaf of bread and a bottle of milk? Things are all going up. and building supplies is one that's a bit closer to my area of expertise. We've definitely noticed trades are becoming more expensive, and the materials that the trades use, so your steels and your timbers, those prices have gone through the roof. So I'm going to jump into a few other questions now. So how much of a deposit do I need to buy an investment property? This is a very broad question, but in a general sense, you probably need at least $50,000 to $60,000 to buy your first investment. You're not going to be buying a very glamorous property. It's probably going to be on the low side, around $300,000 to $400,000. You can definitely still buy properties in the greater Brisbane market around that price point with some good opportunity. And you really need that much money because you've got stamp duty to think of, you've got closing costs, some mortgage fees and lenders fees, and you need a strong enough deposit to allow you to leverage into the property market. So 50 or 60K will get you, using LMI of course, will get you enough money to probably buy a $300,000 to $400,000 property. Would you pick principal and interest repayments or interest only repayments, and why? My answer in short here is I definitely like interest only for investment properties, and I would typically go principal and interest on my own home. So why? So principal and interest on my own home is because you can typically get better rates. So you can probably get a low mid 2% rate at the moment on variable interest rates, on variable principal and interest rates. And then the reason I go interest only on my investments is to maximize the cash flow and potentially pour my money into my own occupied property, which is bad debt. But yes, principal and interest on your own home and interest only on your investments, with a caveat that you can't have all interest only on your investments because that will hurt your serviceability. So keep that in mind. What is my biggest tip for DIY renovators? Lay out your plans, paint as much as you can, and do flooring last. A couple other questions here. So how many properties to get to 100K passive income? Now I think this question is probably worded wrong. So it's not how many properties, it's how much value of property will you require. So if you want $100,000 passive income, you'll probably need $2.5 million worth of equity, $2.5 million worth of unencumbered assets, so not debt attached to that $2.5 million, which will give you roughly $100,000 passive income. Now, obviously, inflation's going to kick in, so you might need more than $100,000 passive income. And that's why capital growth is so important, because to get $2.5 million worth of equity is quite difficult if you're just focusing on cash flow properties. To really become wealthy and create wealth for yourself and your family, my strategy is to focus on capital growth first and then transition to cash flow properties as you look to move to your consolidation phase. Now, the last question for this video, am I too old to invest in property? Or what age is too old to invest in property? So I think if you're old enough to be on the pension, you're probably going to struggle with the banks to actually get a loan to invest in property, but I don't think anyone's too old. If you have the ability and the finance makes sense and you want to invest for that passive income, then definitely go out and run the numbers and look at making a property purchase. The real key here is what the banks are willing to lend you if you're reaching your mid-50s or early 60s, is what time horizon or what length of mortgage is the bank willing to give you. For myself and for most investors, you're going to get between a 25 to 30 year mortgage, but as you reach close to your retirement age, the banks are going to reduce their risk profile on you and potentially want to have, say, a shorter period of time for any loan amount you take out with them. So they might only allow you, say, a 10-year mortgage or a 15-year mortgage. So you have to look at this for your personal situation and whether you want to invest in bonds or shares or invest using your cash in the property market. But I don't think anyone's too old. It just depends on your personal situation. And that's my answer for pretty much all of the questions. It depends on your personal situation. So thanks for sticking around to the end. Help me reach 10,000 subscribers by hitting that subscribe button down below. And if you've got any questions, I'd love to hear from you in the comments. So drop some comments. You'll go into the giveaway to win $50, which will be in my next Q&A video in the next couple of months. And yeah, I'd love to hear those questions from you. See you in the next video. Peace.